Hi, this is Mark with Right Line Trading, and today what I would like to do is go over Japanese candlestick patterns that actually work. A lot of homage is paid to Japanese candlestick patterns, and there really are quite a large number of them. The problem is that many of them don't predictably predict either trend continuation or trend reversal. What I have done is really sift through almost 18 to 20 different candlestick patterns and come up with a few that are strong, reliable predictors of trend continuation. Now, we don't trade tops or bottoms, so we're not looking for evidence of trend reversals called by Japanese candlestick patterns. Trend reversals work sometimes, don't work other times, but they don't have the positive predictive value high enough to trade them. So what we're looking for is evidence in Japanese candlestick pattern formations that almost guarantee us a continuation once we enter the trade. Now, the strongest is that of the engulfing candle. And there are many instances of that here. And in fact, it's so strong, we have software that actually points it out for us. And if we look right here, I'm sorry I have the wrong. Here is a great example of a C engulfing candle right here. And what we have is the A, which defines a trend, which is any two candlestick patterns of the same color. And what we look for are traders trading in the counter trend direction. Now, all traders in this B candle are short. In other words, they're calling a top or calling a trend reversal, which is the thing that we don't do. What we actually do is we use the engulfing pattern to run them over and stop them out, and that's what makes this candlestick pattern so strong. The next candle is an engulfing candle. Now you'll notice that the software actually points out with this triangle that this candle engulfs the previous candle. Now, the trend continuation occurs with two distinct forces. You're in one tick above, and this trade is going to carry you 23 ticks. The two forces are, one, the addition of new buyers into a trend, and two, the fact that all the sellers in this counter trend candle are stopped out. So this is a very, very strong continuation signal. When you enter on the close of an engulfing candle and take the entry one tick above the close, you can see it occurs here. Occurs here. You can see how strong that C engulfing candle, and the reason I call it a C is because it really completes an ABC pattern. Although we really don't trade Elliott wave in right line, if we take the A as the beginning of the trend with two green candles in a row, B is the pullback, C is the continuation. An Elliott wave dogma, A is a fairly small move, B is a tiny move, and then the C wave, or wave 3, is the long move. So it's a very, very strong trend continuation signal. Now, there are two other trend continuation signals. The other is a piercing candle or a dark leg cover. They're identical, just in the reverse direction. Now, just let me go back and say about the Japanese candlestick engulfing pattern. A candle engulfs when the high equals the high of the previous candle, and when the low equals the low of the previous candle. The high does not have to be one tick above, and the low does not have to be one tick below. The high just has to equal the previous high, and the low equal the previous low. Now, in a piercing candle, what we do is we have a move up here, defined by those two green candles, a retracement. Then the question is whether do we enter on this candlestick formation. Now, it's not going to engulf, but the green candle pierces at least 1/2 of the candle body of the previous candle. That is a piercing candle. And that shows a lot of strong buying enthusiasm. You can see this is one tick short of an engulfing candle. But all we need is the candle body to pierce 1/2 of the way into the previous short candle. And then we're in one tick above the close of the previous close of the candle. We have a very, very nice move to the upside for 27 ticks. Now here is a dark cloud cover, which is just the reverse of a piercing candle. This has to pierce. We have the downtrend, 2 red candles in a row. We have the retracement. These buyers are in a counter trend candle. And we want to know if we want to enter on this continuation signal. Well, this continuation has pierced or covered 1/2 of the body of the previous candle. That allows us to enter. It shows us there's enough selling enthusiasm to enter one tick below and take the trade here, 16 ticks. Now, here's another. Here is a piercing candle. It more than pierces 1/2 of the way into the previous candle. Gives us a nice trend continuation to the upside. These are very reliable signals. Shooting stars, hammers, dojis, occurring at the appropriate place can give us some indication of a trend reversal. But like I said, optimally, that's not the kind of trading that we want to do. We do not want to counter trend trade, and we do not want to call tops and bottoms. Optimally, what we want to do is we want to take advantage of all of the traders who are counter trend trading, run them over, and use the fact that they get stopped out to push the trade in the direction of the trend. So what we want to do at all times is be trend traders. We're trading long here. We're trading short here. And we're trading long here. These are the predictable candlestick patterns or entries that we need to confirm the validity of a continuation trade. And they are very, very powerful signals. Again, a lot of the other signals that we look for trend reversals are extremely unreliable. They work sometimes and they don't work other times. And those are not the kind of patterns that we want to trade. Now, if we look right here, here's a move to the downside. See, the software is giving us the entry. Here's the retracement. There's the short. The triangle occurs intra-candle. We're in one tick below the close, which is right here. We have a nice trade to the downside. This is the A, defined as a downtrend, 2 red candles in a row. All these counter trend traders in the B candle going long. and then the trend continuation to the downside. Now, there are other candlestick formations which are valuable, but I just wanted to go over these three at this particular time. And that is the piercing candle on a continuation trade to the upside, a dark cloud cover on a continuation trade to the downside, and an engulfing candle. There's a bullish engulfing candle to the upside and a bearish engulfing candle to the downside. There's one other candlestick pattern I'm going to review in another video, and that is consolidation. And that's where the power of the bulls and the power of the bears are equal, and you get long periods of sideways movement. Now, the mechanics of that are a little bit different, and so we're going to use another video to go over that. But I just want you to really internalize these three patterns incorporate those into your trading methodology. If they do, they're going to increase the predictive value of your entries markedly. I hope this helps, and I'll be following this up with further videos. Have a great afternoon.